Welcome back. Let's talk about more earnings now. Sonata Software saw its revenue and EBITDA margin surge in Q1 FY25. Profit after tax and other income, however, came under pressure. To discuss this and more, we have Samir Dhir, the MD and CEO of the company, joining us now. Mr. Dhir, good morning. Thank you so much for joining us. Before we talk about the overall numbers, I specifically wanted to talk to you about international IT services, because this is where margins have fallen on a quarter-on-quarter basis by 300 basis points. This is when the wage hikes are expected in Q2. Can you give us a sense of what happened here and what is the outlook on margins going forward, considering that wage hike is still pending?
Yeah, good morning, first of all. And I think the results are much in line with our expectation that we guided for last quarter. We have come in at around 1.3% on the growth side. And on the margin side, our EBITDA for the international business that you alluded to is up by about 1.4% sequentially. So our EBITDA went up from about 17.3% to about 18.7%. So actually the margin has increased on the international business side. On the profit after tax, because we had Forex impact in the quarter, that's why the PAT has shrunk largely because of the Forex impact that we had. But the base health of the business has definitely been very robust and it improved quarter on quarter.
Okay, no, I just wanted to confirm the margin number in the international business. As per the calculations, it's at 18.7%, which compares with 21.1% on quarter basis?
Yes, last quarter it was 17.3. It is now 18.7. It is up.
Okay. All right. So you're saying there's a margin improvement place in the international IT services segment on a Q-on-Q basis. But, you know, sir, it doesn't take away from the fact that it's been a weak quarter in terms of revenue. The reason I ask is that the last quarter you had indicated that, you know, growth would be between but that is lower than what was anticipated by the company at the lower end of the range. So if you could just take us through what took place in terms of the demand factors, what resulted in maybe the pressure quarter?
Yeah, no, I think that's exactly what we anticipated as we were guiding for the first half of the year. If you recall, we had talked about that we are seeing some deal decisioning delay, especially on the large deals. And that factor was going to impact us for the first half of the year. We had guided that second half of the year will be stronger. And in Q1 specifically, the deals, we closed 3 large deals. And one of them is a fairly large contract for over 7 years as well. I think as we ramp up those deals, we'll see an uptick coming through in Q2, but largely in Q3 timeframe. So I think in Q1, Q2, we will still be between 1 to 3%, but we'll see the second half of the year much stronger than on revenue terms compared to the first half of the year.
So Q2, you're still going to be 1 to 3% in terms of growth?
That's right. We'll still expect Q2 to be into 1 to 3%, but we'll pick back in the second half of the year.
And the second half would be what then in terms of growth, considering that these 3 large deals that you've signed will probably start reflecting then?
Yeah, it's hard to put a number, but like we said, for the whole year, we'll be ahead of the industry average. We'll be significantly above the industry average, which we are still very confident that we close the whole fiscal year will be above the industry average overall. And the second half will be better than the first half from a growth perspective. That was our guidance, and we still sustain that guidance. Clearly, within the numbers, we have seen some significant movement in some of the industries. We've seen the high-tech industry come up. We've seen the healthcare industry come up. Of course, there are pressure in the retail side, but these 2 industries definitely come up, and banking has seen definitely some green shoots in the quarter. So we expect in the whole, the second half of the year still is very strong, which is what we had thought about a quarter back.
Okay. So in this pipeline that you spoke about, that retail is not doing so well, but the other spends have been going higher. What is the percentage of AI pipeline coming in here? And in that case, going forward, will you be looking at some acquisitions which would improve your AI pipeline? Anything that is planned in the rest of the year?
Yeah, so we're pretty confident about our AI positioning. As you know, we had launched Harmony.ai platform about a year back, and that continues to resonate well with our clients. And our overall AI pipeline is close to about 60 million. I may not have the exact number right now with me, but it's close to about 60 million or so. And within the quarter, we saw some significant wins. We saw about 9 mid-sized deals that we closed out on the AI side, which is very, very promising. So the POCs have now definitely moved to some early projects. And AI is also becoming an integral part of some of the large deals. The last 3 contracts that we closed in Q1, one of them has a AI platform to be built in the first 2 years for the customer. It's a healthcare customer. It's a 7-year contract. So the first 2 years we'll build the healthcare platform out, and then the benefits from that platform will accrue to the customer in the following 5 years. So AI is definitely an integral part, but the standalone AI, which we have closed about 9 mid-sized deals in the course of the quarter as well.
Okay, and what is the pipeline of closing further deals in the AI segment? And also wanted to ask you, you mentioned decision delays. Has that now evened out, and which sectors were you probably seeing that in? What's the status now?
Yeah, so like I said, the overall AI pipeline is about 60 million or so for the company, which is still holding up. I think it's gone up from about 45, 50 million last quarter. So quarter on quarter, not only we've closed 9 mid-sized deal, but we've also added the new pipeline, which is I think very promising and expected based on the investment that we made on the AI side. As far as the deal decisioning is concerned, I think you have to parse it into two categories, candidly. The large deals, I would say more than $10 million type deals are still taking about anywhere around 2.5 to 3 quarters to close out, which was about two quarters or so, maybe a year back. But the mid-sized deal velocity has increased. We're seeing the mid-sized deals close out slightly sooner now in some segments of the market, which is definitely a positive sign overall.
Okay. All right, Mr. Dhir, it was a pleasure speaking with you. Thank you so much for joining us today and giving us all those details. That's the word coming in from Sonata Software. They expect second half to be better than first half. It's time to get you an update.